On today's episode, we are going to take a look at two growth stocks that have dropped a lot from their all-time highs. The first one we're going to take a look at is Datadog. They actually just reported earnings. And the second one is going to be one that's very popular as well, and that's going to be Fsly. Both of these companies are very popular to investors in the clouding market or in the SaaS market. So today's episode is going to be broken down to the following. First, we're going to do a quick overview of what the business does, what they do, who are some of their customers. Then we're going to take a quick look at their financial numbers. And then at the end, I'm going to end with my thoughts. Like always, my name's Jose Najarro. By day, I'm a senior electrical engineer, but by night, I'm a self-taught investor looking for investments to hold for the long-term gains. And if you guys want to check out some of the merch, you should see some down below. If you're new to the channel, make sure to hit the subscribe button and don't forget to hit the thumbs up. It helps the channel out so much with the YouTube algorithms. Like always, none of this should be taken as advice as I am not a professional. And before we go any further, let me know in the comments, are you guys bullish in any of these two, Datadog or Fsly, or are you guys just wanting to learn about them? And while you're down there on the comments, you should see a link to my Discord channel. Is free to anybody that wants to join. We have over 1,000 members right now, and I post every time I buy and sell there. And also, you should see a link to Weibo. If you sign up and follow that link, we both could get a free stock. The first stock we're going to take a look at is Datadog. This is ticker DDOG. Stock price right now is sitting $85.20 after hours. After reporting earnings is down 8%. The market cap with this new laws is sitting close to $26 billion. But year-to-date returns, even after this loss, is still 133%. And right now is sitting about 27% below its all-time highs. All right, so next let's take a look at what Datadog does. So Datadog is pretty much a monitoring and security platform for cloud applications. Developers use them to either monitor the performance of their application and to log any errors or flags that an application might be doing. And why is this important? Imagine if you create an application and every time a user does a certain sequence of events, something slows down in the application and now the application starts to run slow. The user will now get annoyed with the application and stop using your application. So you're going to lose a customer. So with Datadog, if they're seeing some form of errors, red flags, or you're seeing some form of monitoring that, hey, there is some form of slowdown right here in this part of the code, now a developer is able to fix that issue and now your application can run faster. So obviously that is something that is being needed right now in the type of world that we're in. And some of the customers that they have right now are, for example, 21st Century Fox, they have Activision, Whole Foods, they have Ubisoft, they have DraftKings. So now let's take a quick look at their revenue breakdown of their most recent earnings. So right now we can see revenue that ended on September 30th was about $155 million. And this was up 61% compared to the same time last year. And it beat expectations by about 10 million. So we can see huge growth there. Same time last year was about $96 million. One thing we can see is Datadog is not profitable when we take a look at GAAP earnings. GAAP earnings this most recent quarter was a loss of 5 cents. So they're not burning too much money as we can see. All right, so next, let's take a look at some technicals for Datadog. So like I mentioned, I'm a long-term investor. So when opening a position in a company that I want to get exposure in, technicals does not make it in my checklist at all. But once I have a decent sized position or a position I'm happy with, and I just want to see if it's time for me to add some, I do take a look at technicals and see if it's not too extended. If it is, I might try to find another position to add on to or just a new position in general. So right now I can see Datadog does not look like it's overextended. It's kind of back in it's kind of in range with its moving averages. Then I also have the volume profile, which tells me at what stock price did this company see the most volume. And we see a huge chunk of volume here between this price of $80 to $90. So just between 80 to 90, there seems to be a huge amount of buy price. And we can see this kind of stare, this kind of level that it has created. So this is probably, to me, one of the strongest supports right now. And right after the drop after hours, after earnings, we're still sitting within that middle of that 80%. So we're sitting right here with this volume here. So like I said, technicals right now, not overly extended, but we are seeing a bit of a pull down in the past few weeks. Next, I want to take a look at future growth. Datadog is expected to grow its revenue 26.1% annually for the next 3 to 5 years. This is what I consider a hyper growth stock. I consider anything growing over 15% on average annually as a growth stock, but this is way above that. We can see that revenue guidance expectations by analysts is insane. But one thing I do see is this company is not expected to be GAAP profitable anytime soon. Next, I want to take a quick look at their balance sheet. The first thing I see is they have about $1.5 billion of quick cash. And I'm just going to stop there because that's enough cash to pay off its total liabilities almost 2 times over. So this definitely has a strong balance sheet. And let me say this right now, I'm doing a very quick analysis on both these companies. But if you want a full analysis on them, make sure to subscribe to the channel. I am doing individual videos on all of them and do a little more in depth on their earnings. And those should be released in the next 2 to 3 hours from this video. All right, so now my quick thoughts on Datadog. First, huge revenue growth. We saw 61% this quarter, and in the expected future growth is 26.1% annually. Next thing I like is they have a very strong balance sheet, right? They have plenty of cash to pretty much pay off all that total liabilities. They also have strong customer base, and the product that they're using is one that is definitely one that is needed in this market. And we're seeing that thanks to that huge revenue growth. I also like that this company is expected to be non-GAAP profitable at the end of this year. Here we're taking a look at earnings per share from Seeking Alpha, and these are non-GAAP numbers. So we can see at least it is profitable there. But there are some things I don't like, and the major thing I don't like is its current valuation. Forward price to sales ratio is 36. Assuming for the next 2 years, assuming even this almost 10% drop, that forward price to sales ratio is still about 33, maybe 32. So in the low 30s, and we can see forward price to sales ratio for most of these companies have skyrocketed in the past. For example, before all this happened, before COVID happened, price to sales ratio on February was 15, so it has expanded a lot. So right now, one of the major things I don't like is valuation is a bit much. But how would I play it? So this is one that I'd like to have exposure. So if I didn't have exposure to Datadog right now, I would buy in a small position to get my skin in the game, but not a heavy position due to the risk of this valuation. Obviously, if this forward price to sales ratio I was closer to maybe 20, 25, even 25, I would be a great time, in my opinion, for me to add on to this position heavy. All right, so now the second stock we're going to take a look at is Fsly. But before we do, make sure to check out the link below to 7investing.com, where every month they recommend 7 stocks for $17 a month. And if you use my link or my promo code JOSE, J-O-S-E, you get $10 off your first month. May I say, yes, this is an affiliate program, but I use their services and would recommend it to anyone. And also, if you want to continue to support the channel, the merch is down below for you to check out as well. All right, so next we have Fsly. So Fsly right now is sitting at $71.61 with a market cap of $8.13 billion. Year-to-date returns is 233%. That is amazing, a lot stronger than Datadog. And it's down right now 44% from its all-time highs. We can see its all-time highs here. And it has lost almost half its valuation since then. So now let's take a quick look at what Fsly does. So Fsly helps people stay better connected with the things they love. Fsly Edge Cloud Platform enables customers to create digital experience quickly, securely, and reliably by processing, serving, and securing their customer applications as close to the end users as possible by taking them to the computer edge. So this pretty much is an application to help users run their applications faster without lags, and a few seconds of lag can make a huge difference. And this is very different from Datadog, even though pretty much the both points. Datadog is pretty much to monitor your applications to make sure it's running smoothly. So that's pretty much, let's say you have a car, right? Datadog is pretty much making sure that the engine in your car is running fine. I think that's probably the best way I can describe the difference between the two. So Datadog is doing a test to make sure your engine is running fine, that your wheels are turning fine, and if there's an error somewhere, it lets you know. Fsly, on the other hand, it's the road that the car drives. So if the road is super smooth, then obviously, and super straight, then that car is going to get there a lot faster. So that's how, I think that's probably the highest level and easiest way to explain it. So Fastly is pretty much that road to make sure it's as straight as possible and as smooth as possible so that car can get to its endpoint as fast as possible. And these few seconds of lag make a huge difference. Again, very similar. If you're trying to open an application and you're on the wait page for 3 seconds, 3 seconds might not sound a lot, but on customers, when you're doing something and you need something right away, that can get you annoyed, especially if it's very often. Some other customers, for example, are New York Times, Pinterest, Fubo TV, Yelp. So their most recent earnings, again, ended in September 30th. They had about $70 million in revenue, and that was a growth of 42% compared to the same time last year. This, unfortunately, is also one that's not profitable at the moment, and that's okay, right? I don't think it's bad to invest in companies that are unprofitable as long as you know they're not profitable and as long as they have a strong balance sheet to be able to withstand this moment of unprofitability. We can see GAAP earnings per share were a loss of 22 cents per share compared to same time last year being 13 cents. So they are burning a bit more money right now. Next, let's take a quick look at some technicals for Fastly. Again, very similar to Fastly as Datadog. At the levels they're seeing right now, we're seeing a huge volume chunk. Another thing I'm seeing is it's not overextended. It's actually pulled back a nice amount. We saw that 44% off its all-time highs. So it did pull back a nice amount, and it's sitting around here in its huge volume level that's between, let me see, $70 and $85. Yes, that's a huge range. But again, it just tells us where there's a lot of volume going into this company and kind of gives us a kind of view of some support and resistance level. And we can see here this big chunk of volume within this section. Next, I want to take a look at future growth for Fastly. Fastly is expected to grow 25.1% annually for the next 3 years. Very similar levels to Datadog. I think Datadog is expected to grow a little bit faster. Their most recent earnings were also a little bit stronger than Fastly. So I do expect Fastly to be a bit cheaper compared to Datadog. Unlike Datadog looked like it was going to be profitable within the next 2 to 3 years. Fastly does not expect to be profitable within the next 3 years. And this is what's analyst expectation. Obviously, a lot can change as time progresses. A quick look at their balance sheet. Again, very similar. They have a huge amount of cash to pretty much be able to pay off its total liabilities. So this tells me they have a very, very strong balance sheet. Now let's take a look at valuation. So first, forward price to sales ratio for the next 2 years is expected to be 20.77. This is a lot cheaper than Datadog. That is definitely the thing. But we have to understand why. Datadog, on the other hand, is growing a bit faster. For example, we saw that quarter growth being a bit faster and the overall annual expectation growth also being faster. Datadog is expected to be GAAP profitable in the next, non-GAAP profitable at the end of this year, where Fastly is not. So obviously for those reasons, investors are willing to pay a bit more for Datadog than Fastly. But what are some things I do like? First, revenue growth for Fastly is still pretty strong, 42.6% this quarter compared to the same time last year. And revenue growth is still expected to be high growth, 25.1% annually for the next 3 years. Very similar, they have a strong balance sheet that can pretty much pay off total liabilities. Next, some things I don't like. Very similar, I don't like the valuation right now. It is a bit high. We can see in 2019, it was about 12.05 at its peak, and right now is sitting somewhere around high 20s. So it is a little bit extended from that price to sales ratio, but of course we're seeing a lot more growth now with the overall market. Another thing is they're not expected to be profitable anytime soon in non-GAAP earnings per share. So how would I play it? Very similar to Datadog. Right now, if I wanted to get exposure, I would buy a small position to just get skin in the game. But with overall its heavy valuation, just me, again, every investor is different. Some other investors might not worry about that risk and just really think about the long term of things and might open up a heavier position. But for me, just either open up a small position right now or add on a small position to my current exposure and not go too heavy in. Again, every investor is different. But like always, I hope you guys enjoyed today's episode. Make sure to thumbs up, make sure to subscribe. And if you want to see full valuations, make sure to check out the channel. I will be doing a full valuation of both these stocks in the next few hours.